Allah does not call interest-based banking haram or a sin, but Allah calls it a declaration of war with Allah and His prophets. Why is interest-based banking so bad that it's worse than any sin and God declares war with the people who indulge in it? Simple answer is that it destroys the economies and nations and brings them completely under debt and slavery. But let me explain you how. I will give you an example to prove the fact that the banking model destroys our economies and societies and has no benefit for anyone other than the banks itself. It's a very well-designed deception that even the CEOs of the big banks have no clue of what's happening. These CEOs or bankers think that they are helping the world, but in reality, they themselves have been tricked by the devil and the Jews. Interest-based banking leads to inflation in economies, corruption in the society, devaluation of currencies, improper flow of funds only within the rich, and so much more. Check this out. For example, there are 3 people in a city, A, B, and C. A opens a bank and B is a rich person who deposits £100 in A's bank. Now C is a customer of the bank who comes looking for a loan. C gets a loan of £100 on a 10% interest rate and buys property from it. Now let's pause here and analyze what exactly happened in this transaction. This small transaction is enough to prove the corruption of the banking system, let alone diving deep in the banking concepts. Try to understand this now. The hard cash is only £100 of B, but that £100 is owned by 3 people, A, B, and C. A owns £100 from C as he gave him a loan, B owns £100 that are deposited in the bank, and C owns the £100 of value through his purchased property. So, the hard cash in the market is £100, but we have done dealings or transactions worth £300, or in other words, we have asset owners of £300, but the only hard cash available in the market is £100. Now think, where will the remaining £200 come from? There are only 2 ways. One is printing more money, which leads to devaluation of currency and inflation of costs, or the other way would be that C defaults and A takes the property of C based on the loan agreement as a collateral. As a result, only A benefited from this deal or transaction. B and C both are in loss. The value of B and C's money has devalued due to devaluation of currency. However, A did not make any loss, but it made a profit because it charged interest which covered the inflation and the profits for the bank. So, on the face value, bank or A helped B and C, but in reality, A stole the value of assets of B and C, and the bank retained it with itself in the form of interest payments. The bank made a fool out of B and C. This is just one example, and there are trillions of such transactions out there. Just imagine and calculate the impact of trillion other similar transactions across the globe. This is how IMF and state banks have ruined most of the countries across the globe, and international banks have ruined the local economies. The rich gets richer and the poor gets poorer.